Narayan now joining us, and today he's going to do an analysis for all of our viewers right here on Markets at Noon. How markets have typically behaved during election season. We're not saying this is how the markets are going to behave this election season, but this is what the pattern has been. Hi, CK.
This particular chart, it stretches from 1977 all the way till about 1996. Now here the whole pattern changes a little, and you're finding that after every election in this period, the market has tended to go up, and it did so in 1977 and upward in every election. It did not matter here whether the market was at the bottom or it was at the top. So you would find that as the elections moved ahead, the market actually kept pace going upward. And it was only in 1996 that we saw the market actually turn a bit soft. And this was a period when things were a little bit iffy because the coalition government had actually moved in. And then if we move on to the next particular chart, which will now show you the the election period from 1997, we actually had two elections at that time. One which was in 1996 and quickly followed by another one in 1997. If you recall, that was the period of coalition governments. There were about 3 changes and 4 prime ministers, and it was also the period of the infamous 13-day government of Mr. Vajpayee. Now what is interesting on this chart is that you can see post-elections that the moves are becoming much larger, and typically we are seeing here that the election results, it didn't matter whether they came when the market was high or when the market was low. Typically we are seeing that there is a little bit of pullback when the market does prior to the election, but the moves which have emerged from it have been pretty substantial. The last one here is 2009, and then it went up to 2014, and that was when we had the big move. And that brings us to our chart number 4, where we are seeing the situation coming into the present. Now here you can see in this particular case, earlier I had used a mix of the RBI index, and then I used the Sensex from 79 onwards, and here just for a point of illustration I am actually using the BSE mid-cap index. Now we can see that 2009, 2014 the markets again saw a large move upward, and then we are now coming into 2019. So what's the situation in 2019? The markets have pulled back significantly. Now the index per se might be only about 8-9% down, but the real pain felt by most of the market is in the mid caps, and the mid caps are drawn down about 25%. What's even worse, if you look at the market cap drawdown, that's almost around 50-55%. So the market is in a big drawdown. And I have also drawn a tool here called the pitchfork, and we can see that the market is actually trading near the low of the pitchfork that's down at support. Now if you take all these things together, there have been 16 elections so far, and 11 out of those 16 elections the market has chosen to go up. That means about 70% of the time the market chooses to go up post an election. So we are coming into a point of, for the 2019 elections, with the market drawn down very well down into support. The history, the pattern of history shows us that there is a 70% chance of a big upside action post the election.